Most business owners, especially wineries, are making decisions that really sounds a little arrogant, but realistically, a lot of people are running their business without taking into consideration what is happening in their financials. Yes, they're probably checking their bank balance on a regular basis, but if you're lucky, they're checking their financials once a year, and probably not even from an operational standpoint, but rather in terms of figuring out what taxes they need to pay. All of this is a strategy in hope that things will just work out. But in reality, it's a bit of guesswork, a little bit of luck, and it tends to not work. Today, I'm going to talk about a habit that separates reactive businesses from profitable, well-run businesses. This small change can improve your decision making and give you a better chance of being successful. This is what I see all the time. Passionate owners, incredible products, but financially, they're driving while looking in the rearview mirror. They wait until tax season to understand performance, or worse, they only rely on their bank balance to make decisions. That is short-sighted and can be very dangerous. The bank balance does not tell you if you're profitable. Your bank balance doesn't tell you if you're overspending, and your bank balance doesn't tell you what's happening in the future. Businesses that tend to win are doing one thing differently. They treat their financials as a monthly discipline, not an annual task. This is what we call the monthly financial huddle, and it's not complicated, but it does require consistency and intent. For every business owner, you need to block some time on your calendar every single month and hold yourself accountable to reviewing your financial information. Treat it like it matters, because honestly, it does. It's not a casual review. This is a decision-making process. It is a moment in time to reflect on what has happened and where you're going. It's a time to think about the decisions you made and if they make sense based on your current financial situation. You can do this meeting by yourself, but we do encourage you to bring in important stakeholders like other owners, general managers, or key personnel at your business. And it's always important to ask the questions to your accountant rather than guessing what it actually means. During this time, we recommend you focus on a few key things. Number one, understand the why. Don't just look at the numbers. Ask questions about individual numbers. Why are we over or under budget? What changed this month? Why did that expense go up? Number two, review your accounts receivable. A lot of the time, cash flow problems come into place because business owners are afraid to ask their customers to pay them. Take time to review who owes you money and what next steps should take to improve your overall cash flow. Use the information to look ahead at your cash flow. What's happening this week, next week, the next 30 days, even better, the next 13 weeks? What are my upcoming expenses? Do I need to make any big purchases? Do I have capital expenditure coming my way? Is there seasonal expenses on the horizon? All these changes in expense flow can have a material effect on your cash flow, which require you make different decisions and potentially reach out to other stakeholders to help you fund them in the short term. Most importantly, and the last thing you should be discussing, should I be adjusting my decision-making process? Should I continue to spend that money on marketing? Can I afford to give away those discounts? Should we be purchasing right now? Do I need to invest in that capital purchase or can I delay it? Use the data to make informed decisions that will be best for your business and allow you to continue to move forward profitably with cash flow on hand and give you the best opportunity to be successful. Make these decisions with real data rather than gut feel. This review can only take place if you have the right information in front of you. At a very minimum, every month, you should be taking a look at your profit and loss statement, you should be looking at your balance sheets, and you should be looking at a cash flow statement. You're using your profit and loss statement to understand the inflows and outflows in terms of pure profit and losses, and understanding when you're making money and when you're not. You're taking a look at your balance sheet to review cash balances, how much inventory on your hand, who owes you money, who you owe money, and are there any long-term obligations that need to be paid. The cash flow statement brings this all together, bringing into account your expenses, your income, and capital investments to see the flows of cash in and out of your business over a period of time. When reviewing, take a deep look at your sales, understand sales by channel, understand the profitability by channel by taking a look at cost of goods sold and what that net difference is. This review would be done even more efficiently if you have an accountant that is assisting you with inventory costing on a regular basis. Especially in the wine industry, the true cost of your inventory really does make a difference, especially when you're setting prices. Knowing how much your wine costs when taking into account grapes, labor, overheads, and dry goods, it'll give you the right indication of what wine costs you and what minimum price you need to be setting to be able to make a targeted gross margin percentage. Knowing how much you can sell your wine for versus how much it costs can also allow you to make decisions whether this is a wine that is suitable to be sold in the wholesale market, or you're most likely going to have to give up some margin through distributor billbacks to be able to get the shelf placements that you need to allow your product to move. Taking a comprehensive look at your financials will change the way you think about your business, and these small shifts will allow you to make better decisions with the goal of improving profitability. With a good account in place, this whole process can be fairly simple. But even when people have good information coming their way, they still do not take the time to review their financials and use them in making decision-making processes. Why is this? For the general business owner, the reason they don't do this is that they do not have clean books, the financials are not completed, the reconciliations and close are not completed timelessly, there's not accurate reporting, and generally from an operational accounting standpoint, the business lacks discipline. If you're going it alone, most business owners just don't have the time or systems to make this process successful. So they end up falling behind and have to revert to their gut to make those decisions. The problem is once you fall behind, it is really hard to catch up unless you get adequate support in place. If your financials are more than a couple of weeks overdue, you probably need better support. Every small business can benefit from the support of an accounting professional, somebody that understands the ins and outs, understands your inventory, and can complete the work with good processes and on a timely basis. This will allow you to get financial information for you to review to improve your decision-making process. When this all changes, a lot of things tend to happen. Business owners go from being reactive to proactive. They move from guessing to knowing. And if all works out well, they go from surviving to scaling. Having good financial information allows you to start making decisions with confidence. You'll be able to make better decisions on when to invest, when to cut costs, and when is the right opportunity to push growth. You need to stop allowing your financial information to be a burden to your business and rather a tool to your future success. If you do not have an accountant in place, this is the moment I tell you to go hire one. If you're a winery, reach out to Protea Financial, and we're more than happy to talk to you about options to improve your financial information as well as your decision-making process through a review of financial statements. If you do have an accountant in place and you're not taking time to review your financials, this is me telling you to start today. Block the time, get the right people in the room, and start asking the right questions. Use your financial information to make more informed decisions and give yourself the best opportunity to succeed. Invest in your accounting, review that information, make good decisions, drive success.